Right. Thank you, Brian and Lisa, for joining. Brian and Lisa are from Acquire. They're raising a bridge round right now to get to their seed. Fantastic terms and fantastic company that we're clients of. So a bit of a special one for us and a company that we're obviously like really excited to have on here. Thanks for joining, Brian and Lisa.
Thanks for having us. Yeah, it's been great working with you over the last month and a half, launching a couple of offerings that some of the investors may have already participated in. Yeah, it's a cool community what you guys have.
Yeah, thanks. Yeah, if you've invested in any of our offerings before, you'll be familiar with what Lisa and Brian are doing. They're developing a new way for investment managers and deal sponsors to raise money from LPs, basically in a way that is much less horrible than what's out there at the minute. So yeah, if you're someone who's done deals via like any of the number of investment platforms out there, you'll know it's a clunky and often painful process. Or if you've been a deal sponsor and used them, you'll know all about that as well. So do you want to say a bit more about the landscape, guys, and how you're making it better?
Yeah, I'll open for sure. So I'm the founder and CEO of Acquire Invest. What we have is called the Invest IQ platform. It's among a few things we're working on at Acquire, but the platform is designed for people like Wyatt, bringing SPVs to the market, also funds, venture capital funds, private equity funds, family offices, pretty much anybody in the alternative or private sector. What I saw personally in, my history working with, private equity and certain deals, I had a lot of pains that Wyatt's experiencing right now, and I just kind of wanted to solve them myself. So here I am 2 years later, solving the problems of investment operations, onboarding all the way through life cycle, management. And the key for me was automation. On our website, we've got this video, and my idea behind it was 70% of it's you doing activities and 30% of it's you doing, work at the office. If we can accomplish that goal within the software, that's a job well done. So.
Yeah, one of the things that I would add to that is that, the focus initially is on the offering, but it really translates immediately to the investor. So I'm one of Brian's early investors, and I'm also one of the co-founders of the firm. And I've spent a lot of time both in financial services on Wall Street as well as an investor. And I can tell you that the pain as an individual investor looking to onboard your assets, manage your assets, understand what your portfolio looks like, and not have to redo tasks and go through a process that is very disjointed, reducing that is incredibly valuable to me as an investor. And ultimately, the automation that Brian's vision is going to help us realize is going to provide more streamlined investment options and more liquidity in the long run for both the investment opportunity and the investors. So that's fundamentally the reason why I'm on board and working with Brian and the team as we move forward.
Yeah, I think it's a big problem. Like, I'm sure there's no quantitative data out there about how many LPs give up on investments just because the process is so utterly painful. But it's not zero, is it? Like, there must be significant dollars that don't get raised because people just can't deal with whatever.
That's right. And when you think about cycle time, if you've got a great idea that you want to present an investor, you want to be able to capture that investor's attention quickly. And the longer the process drags out, because they've got to look at a deck, and then they've got to fill out paperwork, and then they've got to look at an investment deck, and then they have to run more paperwork to actually make an investment, that can stretch, clearly weeks and sometimes into months. And life's too short, right? Particularly with a lot of LPs that have a lot of investment options. You want to be able to capture attention and move quickly. And that's really as a fund benefit. And it also ends up being an investor benefit because it reduces costs and gives them better visibility into the comprehensiveness of an ability to think about an investment.
Yeah, it's funny you say that. We had an investor in our second SPV who wanted to jump into our third kind of at the last minute. And I pinged Brian and the team, was like, how do we how do we do this? And Brian's like, just tell him to log in. He can do it. I think he was in and out in about 10 minutes. Money was wired. It was the easiest thing in the world. It was unbelievable.
Yeah, what you're referring to there is something we're doing within the platform called the Acquire ID. Once an investor goes through their onboarding process, actually creating a profile is KYC. You go through and you do accreditation, which normally has to happen on the back end. Additional costs are around that. But once you do it once, you're in for that issuer. And anything Wyatt launches, for example, his future 15 or 64 or 72 SPVs, you can log in, you can see those, you can peruse them, you can invest directly into those without having to go through that same KYC process, profile creation process, accreditation process, new document signing. You'll have to basically only sign a commitment agreement for the individual offering, which again is within the platform. So for those that haven't seen the platform, what it's capable of, you can not just create the profile and become onboarded, but we have built our own e-sign system that, in our opinion, replaces DocuSign, is much more specific to this industry, makes it simpler for the fund manager to set up. And, we basically have this standardized signature page that simplifies what you have to do as an investor. You don't have to go from page to page and fill out each blank and make sure it's all filled out properly. This way it's a form fill. Once you're done with that form fill, you're done with the doc. So
just a little anecdote about that. We, our Alts One fund was based on another platform, and it's moving over to your guys's, but they have an integration with DocuSign, and the login for the DocuSign was under the name of a previous employee. And so when that employee left, we archived his account, not knowing about any of this stuff. The entire integration broke, and people couldn't invest in the fund anymore. And it took us honestly about 3 weeks to figure out why it was. That's
exactly why we're doing this. Yeah, no, it's funny because we had a family office we were talking to recently who also did the same exact type of integration that you just described. It's very interesting to hear that you've done that. I didn't know that about your past there, but they had the same problem. It broke. They were out of operations for 3 months, and family offices have a certain bar to meet for their investors. And they didn't have that for a little while. So yeah, we're trying to fill in those blanks. Wyatt, his team, they all get access to the same source of data, a single source of truth in the platform. On the back end, you just log in. If we were all partners, we'd all just log into the same database. We can see the same information. If one guy leaves, no big deal. You revoke permissions, and you add a new guy, right? It's as simple as that.
Yeah. Cool. Do you want to show off the platform, show what it can do?
Yeah, I'll put something up, and essentially, I've already logged in. I've gone through KYC, which takes maybe 5 minutes. It does all the type of checks that you would expect, so you get the right security on your LPs and investors into each fund. As you can see here, I have a couple accounts as an option. I'm an issuer for 18th Ventures, and I'm an issuer for this Rockefeller, but I'm also an investor. So this is my personal account. Most of you as LPs will only see this issuer account option, and the representatives portal is a forthcoming feature where you can bring in your advisor to make actions on your behalf. They can actually manage your profile. But if you've logged into Wyatt's platform, you'll know that there's a quick option here where you can select the issuer that you want to go into their experience for. So that would be maybe Altea. You'll have a master portfolio and something that shows all transactions across all of those that you've invested in, whether it's 18 Ventures or Altea or some other issuer that happens to be a client of us. It all gets associated to your account. So you do get, as an investor, also a single source of truth across your portfolio.
You guys haven't really mentioned it, and I've not seen it in your deck anywhere, but you could extrapolate out how this might quite easily or eventually or logically, whatever you want to say, turn into a sort of marketplace for deals, can't you? So if you've got hundreds and hundreds of sponsors on there with open deals and you're logged in as an LP, it wouldn't be difficult for you guys to build out the infrastructure to have search, filter, sort, find real estate deals with this projected
Exactly.
IRR and all the rest of it. And from there, like it very quickly becomes like a much more exciting and lucrative offering, doesn't it?
Absolutely. Yeah. Lisa can speak a little bit to this because she's seen the vision from day one and how we chose to get to where we are now. We wanted to serve the supply side out of the gate. And the supply side of a market, in my opinion, is strong. You want to be able to help them scale their operations so that they can actually reach more investors in a more efficient way. And that's what we ended up doing, because our initial goal was actually to create a marketplace, but we ended up going to the source first. But as you mentioned, create a marketplace across all alts offerings at other firms. And Lisa, I don't know if you want to expand on that a little bit.
Yeah, I think it's one of the features. It's clearly the vision that we've got for the business. And that vision backing up into how we enter the market is where we are right now, where you've got to have enough supply in order to create an active marketplace for ultimately the investors. And so that's why we're starting the way we are, which is getting the technology out to groups of funds and people that are looking to provide the opportunity for investment so that we can get a big enough book of business. But ultimately, we kind of think about it and talk about it on our own as the Robin Hood of private placements, because the intention is to keep it in the private market. That really benefits both the investors who may be able to get liquidity sooner than they wanted, or on demand in certain circumstances if the fund allows it, as well as for the funds, because it gives them a constant source of fundraising on the front end and an ability to kind of cycle investors in and out as thesis change. So you may see an evolution, but the efficiency of it is quite dramatic. And so it allows funds to provide that optionality in the long run. And at the same time, continue to deliver strong investment options for their constituents. So there's always funds looking for more capital, and there's always investors looking for greater investments. And so by marrying that with a long-term marketplace vision and app vision, it's really going to help the private market become more liquid, not completely liquid, but more liquid than it currently is. And that should be attractive to both sides of this.
Yeah, for sure. I think one interesting thing about that, you mentioned Robinhood, like I think an advantage that your platform has, and I guess the vision has that Robinhood, e.g. wouldn't, is that every new bit of supply brings some demand with it, doesn't it? Because so we've onboarded a few dozen LPs through our offerings, and all of them are now on the portal. And as new things become available at some point, they're already there. You don't have to go out and find them.
That's right. And the ability to search that Brian was describing and understand what might be available for them to look at begins to create at least part of the marketplace on the front end. And the liquidity portion will come on the back end over time.
How much, like how big is this market? Like how big can something like this get?
That is a great question. There's a number of ways to look at the market. If you look at alternatives in size alone, we're going to see that it's probably around 13.2 trillion. We have a little bit in our deck that you all have access to through the Alts Deal portal, I think it's called. 13.2 trillion is the assets under management. Now we service, the people managing those assets, whether it's SPVs, funds, and this number is specifically around funds and excludes SPVs. So the market can be seen much larger than this as well. And it's growing pretty rapidly. The demand for the alternative asset class is high because just frankly, the public markets have been letting people down for quite a while. I think the deal types are more attractive, they're more interesting, and the terms, as long as you can navigate them, provide you a better return. So, we're seeing people migrate this way. We're seeing a good growth in the market. And, our goal is to capture really initially just their cost structure. We've got a page in here that'll talk about the costs of fund operations and over institutions, which McKinsey & Company showed is $207 billion annually that is spent on just supporting funds. If we take Blackstone, for example, BlackRock, Blackstone, they may have maybe 9-10% of the market. So they're spending hypothetically $20 billion a year on just support. If we could move the needle 1%, that would be huge. But our target is much higher. We're estimating between 30 and 70% efficiency savings, which obviously can result in savings across personnel and so on and so forth around operations. That's kind of how we see the market as it is today.
Yeah, and there's so you're starting with it's a core suite of products, but it's easy to see how that can expand horizontally, isn't it? Into the legals and the accounting and all the other painful and expensive. And as someone who has to pay those bills, I don't think they're worth the money I'm paying them. I mean, they're copy pasting boilerplate stuff. And
it's interesting right now, Wyatt. It's a great point, because you're probably not going to replace legal as a service, although the technology changes that are happening with AI and other things are going to make document creation probably more cost effective in businesses like that. But the need for legal to send the document to the investment fund, then out to their constituents to get it transacted, streamlining that process, because right now it is quite disjointed, takes out a lot of friction and cost in the system, number one. When you think about accountants, when you think about fund admins, when you think about tax work on the back end, a lot of the problem in the investment cycle is the fact that the data is coming from very different sources, and a lot of it's still being done manually. So there's no single system. So it's fraught with the potential for errors, not saying where it takes a lot of time to audit it to make sure it's right. And if everybody was using the same platform, and this has got the optionality for blockchain backbone, the same data set, the same information on investors, the cycle time continues to reduce, but that's just costs that's stripped out of the system. If you can get a fund admin out of doing phone calls for KYC and out of Excel spreadsheets to track investments, the savings are enormous, and those savings are going to get shared both with the fund and with the investors. So it's win-win all the way around, and that's what this technology is opening up.
No, I was going to say, I hadn't really thought about that, but you might eventually see management fees, for example, compress a little bit.
That's right. It probably lets funds self-manage quite a lot longer than they would otherwise be able to, because they're able to take care of the paperwork without adding a lot of burden in terms of time and tracking.
That's right. I've written a couple articles about this. There's, one even on AI on our website right now. And, AI and all these tools, including Acquire, are going to be able to automate out a number of functions that are very costly today. They're very manual today, require duplicate input, manual work for multiple people across multiple teams that are all siloed, right? So we're going to solve a lot of these problems, but the regulations change, compliance changes, the strategy of how to file your taxes in the most efficient way, for example, that requires strategy. So always there will be the need for human interaction, human intervention, and human planning within the system. But our focus isn't around placing the mind, the strategy. It's definitely around the busy work and making your life easier. Something I've focused on a lot is the wealth migration that we see from one generation to the next. And, the demands on the type of experience they're looking for has changed. It used to be, I call a guy and my guy handles everything, right? I didn't have a portal to do anything. Then Fidelity comes in and you can kind of get a little more look into your portfolio, but it wasn't as accessible in the alternative sector. And what I'm seeing now is the ability to offer Wyatt and other groups like yours a fully white labeled experience that is modern, and it offers the investor a simple, easy to navigate, fast process.
I think the model I've got in my head for you guys is the status quo is Windows XP, and you guys are going toward an iPhone sort of experience. That's how I envision this feeling, it just works, right? I'm not worried about all these other things and all this other painful stuff.
We're trying to make this accessible, not just inside of an automated world, and not just for groups that are doing SPVs, but our mentality is very institutional in nature. Some of the tools that Wyatt isn't even having to use will be applied to other fund structures. And we've built this system to really migrate from complex fund structures, large institutional mindsets, down to your one and done SPVs that are honestly a little easier for us and easier for the investor to navigate because there's not as much regulatory elements, compliance elements around it. You'll see how the platform can, make your lives a little easier.
Yeah, that makes a lot of sense. Like, this has been a fairly softball chat because I happen to like you guys and like what you're doing a lot. But one sort of challenging question: do you feel like you're trying to boil the ocean a bit too much by making it everything to everyone right off the bat and not sort of focusing on one niche?
We spent quite a bit of time finding product market fit and solving problems for SPVs, solving problems for venture capital, private equity are remarkably similar, right? It's all investment operations. They all follow the same compliance guidelines. Structures may shift slightly, but if you look at the competitors, the incumbents out there, it looks like we're trying to solve the world, but we're really just solving alts, right? Private equity, private placements. And the missing piece in the industry to me was a connected end-to-end solution. We weren't building everything from the ground up. We're building the critical elements from the ground up. And then we're connecting those elements, automating functions, connecting data, pre-filling your documents with your profile information so it's faster. Those things are evolutions to what exists currently. And, I think that's how we're approaching that question. I think we're highly focused, especially when you look at our strategy moving forward and into our seed round and how we're going to attack the market. Our focus is on individual funds in the private sector.
Yeah, I think the only thing that I would add to what Brian said, because I think it's a very comprehensive, is the technology behind the platform doesn't know and doesn't care whether it's a one-time SPV, a venture fund, or a private equity firm that's got 30 funds. It all gets handled the same way with a sorting function or a segmentation function based on regulatory, based on the number of users, based on the type of reporting you might choose and things like that. So it's very agnostic to the type of platform. In terms of boiling the ocean, the question is, how do we approach it from a commercial standpoint, right? So I would say we're not boiling the ocean from a technology feature set, because these are the features that we think both the fund and the investors want to see in order to take cost out of the system, interact more smoothly, increase rates of close, if you will, on both sides of transactions, and then ultimately deliver better investment experiences. We think that's the price to entry, irrespective of where you sit in the market. And where we're going to focus is really trying to build critical mass early on with companies that see that vision and can help us scale in different ways and prove out the utility of the platform and help us understand the next level of investment we want to make in terms of feature set. So it's really very consistent technologically, and it's just a question of how we target the market commercially.
I think to put the nail on the head in terms of our positioning as a company in entering the market, there is a barrier to entry for servicing clients. Right. Yeah. This is a highly regulated compliance space. We have our unique differentiators from our optional blockchain module to the level of automation that we're bringing to the market. But in order to enter this space and take market share, it's important to build the tools that Wyatt and other people like him need. If you come to market with a partial solution like, oh, hey, I'm solving your subdocs. It's like, great. Okay. Well, now I got to go get software to track my cap table. Okay, great. Now I have that. Now I got to go get software to do the next thing. And that doesn't give you a market advantage. So for us, the barrier to entry is multiple years of development leading up to a software suite that we felt was comprehensive. We skipped what you would call a typical MVP build because, working in the industry and having the level of advisors that we do have across fund admins, former Blackstone, so on and so forth. These guys said, look, we got to do this right out of the gate. And, you enter the market with something impressive, and that's how you land customers. So we've got plenty more to build for sure. We plan to disintermediate as much of the process as possible. But, that barrier to entry, it's also a defensibility mechanism for us. It's going to be harder for the next guy to come in and accomplish the same thing in a quick period of time, because it does take quite a bit to build something like this.
Yeah, I bet it does. That wraps it up pretty nicely, actually. Is there anything that we've not covered that we should have? And like,
look, we are in our pre-seed. We would love to have you guys as investors, since you're also users. We're finishing a bridge round, and we've allocated a specific amount to Wyatt. Talk to him, and we actually are working on a even more advantageous valuation point for your allocation. So something we can release, and Wyatt will share with you guys later on. But the call to action, I guess, for me is just, let's talk. Let's get on a call. Lisa and I are happy to chat with you guys at any time. I'll show you more about the platform, answer any critical questions you might have. We're going to raise money on Acquire with our own platform. So if you feel like just jumping in, you can actually log in, go through and indicate interest directly in the platform as well. Lisa, do you have anything to add?
No, not at all. I think this has been a great session. We really appreciate the support, Wyatt, and the opportunity to serve you and your clients. We think we've got something terrific, and working together with you is going to help you be successful and help us learn and grow, and that's much appreciated.
Yeah, super excited. Thanks, guys.